Welcome. This video gives you a brief overview of the pro version of the Trader's Dynamic Index, an indicator used by thousands of professional and retail traders around the globe since it was first introduced in 2005. Hello, my name is Dean Malone, the developer of the Trader's Dynamic Index Pro, also known as the TDI Pro. I welcome you to the overview, and I want to give you some background about who I am and why I developed the Trader's Dynamic Index. I'm a registered broker, a member of the National Futures Association, and a commodity trading advisor. I've been interviewed by CNBC, Reuters, CNN, Wall Street Journal, and others. And I've trained tens of thousands how to trade the Forex market since 2002. The reason why I give you a little bit about my background is to let you know what I've experienced in the institutional trading world. And I want you to have similar tools the institutional traders use. Even more, I want you to experience a greater simplicity in your trading. That's why I created the Trader's Dynamic Index Pro. Instead of having multiple indicators on your chart, the TDI Pro gives you the ability to see market sentiment, which gives greater insight into the potential market movement. Before we get into the overview, it's important to me as a licensed broker that you're fully aware of all the disclaimers related to trading the Forex market. And no representation is being made that any software trading will guarantee profits or not result in losses in trading. The Trader's Dynamic Index is a hybrid indicator developed to show market conditions related to trend direction, momentum, and market volatility in an all-in-one indicator. Years ago, when I was first trading, I had at one time as much as 27 indicators on my chart, thinking that all these indicators were going to tell me when to get in and when to get out. As a matter of fact, I struggled with my trading because all those indicators actually gave me more hesitation than actually helping me to trade. That's why it's important to me to have simplicity in my trading. So the question you may be asking yourself is, why should I use it? The TDI Pro shows market sentiment, the overall attitude and perception of traders and investors in the market. And when price action and market sentiment are working in unison, this gives traders a distinct trading advantage. So let's talk a little bit about the structure of the TDI Pro. The TDI Pro is made up of 5 lines. The green line is current price sentiment. The red line represents crossovers to where we can enter and exit the market. The yellow line is the overall market sentiment, and the blue lines, they show increasing and decreasing volatility. There are 3 levels in the Trader's Dynamic Index Pro, and each one of these has significance in how we trade. The green line, also known as the RSI price line, identifies positive and negative sentiment in relationship to the 50 level. When current market sentiment, represented by the green line, is above the 50 level, the market has positive sentiment. We look to trade long. When the green line drops below 50, we are now into negative sentiment, and we should consider trading short. One other aspect of looking at current market sentiment is identifying overbought and oversold sentiment conditions. When the green line rises up above the 68 level, this is buying exhaustion, where buyers aren't looking to buy anymore. And we expect buyers to start exiting their positions and the potential for the market to turn short. Just the opposite, when the green line drops below the 32 level, this is where sellers aren't looking to sell anymore, most likely exiting their positions, and we look for that potential turn long in the marketplace. Now let's take a look at the red line. The red line is known as the trade signal line. This is letting us know when to enter and exit our trades. Whenever the green line crosses the red going up, we're looking to trade long. Whenever the green line crosses over the red line, we're looking to exit our long and potentially enter short into the market. The market baseline, the yellow line, represents the overall market sentiment. This is where the overall perception, the overall attitude of the market is going. Is it going down, or is it going up, or is it flat? And when comparing the direction of the green line related to the yellow line, gives us a more favorable trade condition. Especially if you're a conservative trader and you're looking for more confirmation of a direction, then you would be looking to trade in the direction of the overall market. If you're an aggressive trader, you're looking for that immediate market momentum. So look for the green line to bounce off the yellow to show immediate market continuation, or look for the green line to cross over the yellow line, showing an immediate market shift in the opposite direction. One of the key benefits of the market baseline is to identify market reversals. As you trade, you can look at the market baseline in relationship to the current market, and if the market baseline starts to fade when it's above the 68 level, or starts to rally when it's below the 32 level, look for a turn in the market and catch a reversal as it's starting to happen. The two blue lines of the TDI Pro make up the volatility band, which allows us to identify increasing and decreasing volatility. Now, what is volatility? It's simply market strength. When you step into a trade, you want the strength of the market behind that trade to carry that trade on through, much like stepping on the gas in a car when you get onto the freeway. We don't want to be puttering while we're trying to get on the freeway. We want to step on the gas and get going. Well, we want to see the same thing from the market. So when the two blue lines are expanding, moving away from each other, that's increased volatility. We want to see that when we get into a trade. On the flip side, when the market is losing strength, or we see the volatility bands start to contract with one another, it's probably time to exit a trade. The market is waning a bit, doesn't have as much strength. Up to this point, you've seen a number of advantages of using the TDI Pro. Let's talk a little bit more about trading with the TDI Pro. Earlier, I mentioned to you that I want you to experience a greater simplicity in your trading. So there are only two basic principles when it comes to trading with the Traders Dynamic Index Pro. The first is, when price and market sentiment are aligned, look for a favorable trade in the direction of price. However, when price and market sentiment diverge, look for a favorable trade in the direction of sentiment. And this is so key to trading with the Traders Dynamic Index Pro and for the success in your own trading. With these two basic principles, there are four considerations with trading with the TDI Pro. Number one, treat the TDI Pro as your trading buddy to confirm or counter price action. Use the TDI Pro to confirm entry and exit conditions, determine positive and negative sentiment, and also use the TDI Pro to look for bullish and bearish divergence. With regular divergence, we're looking for conditions in the market that would suggest a reversal in price, looking for the market to make a turn. When you look at this chart, you can see that we have lower lows in price, but yet we have higher lows in the Traders Dynamic Index. This is bullish regular divergence, suggesting the market will go long. And sure enough, the market does go long, makes it push all the way up, and then we find ourselves having higher highs in price, but yet we are having lower highs in the Traders Dynamic Index Pro, suggesting bearish regular divergence, and we get a reversal now in price. Price starts to make a move down, and we can see the same in the TDI Pro. With hidden divergence, we're looking for price continuation. We're looking for price to return back in the direction of its original trend. When you take a look at the chart, you can see that we have bearish hidden divergence up above. We have lower highs in price and higher highs in the Traders Dynamic Index. And sure enough, after that occurred, the market did roll down. A bit later, we have bullish hidden divergence when we have slightly higher lows in price and then slightly lower lows in the Traders Dynamic Index. And what we're looking for is the market to turn and go long. Sure enough, the market turns up and goes long. With the Traders Dynamic Index Pro, we also have three built-in alerts available for you as you trade. The first alert is the TDI cross. This is when the green line and the red line cross over, giving you immediate alert of current conditions in the marketplace to potentially enter the market. The second alert is the MBL cross alert. This is when the green line crosses the yellow line, suggesting that current market sentiment is making a shift, an immediate momentum shift against the overall market sentiment in the marketplace. Generally, I found that when a green line crosses over the yellow line, the market is shifting in the opposite direction of the trend. Then we have the TDI hook alert. Remember when we talked about identifying oversold and overbought conditions? This alert does the trick for you. Whenever the market is, let's say, in an oversold condition way below the 32 level and below the volatility band, we're looking for it to literally hook up across the lower volatility band, suggesting that it's time to exit the short trades as well as potentially look at a long trade. And just the opposite, the TDI hook short is when the green line is way up above the 68, above the volatility band, and crossing back over, suggesting time to exit a long trade and potentially look to enter a short trade. This is the TDI hook alert. Well, all in all, the TDI Pro indicator does a lot of work for you in one simple indicator. Remember, the core basic principles is when price and market sentiment are aligned, moving in the same direction, we're looking to trade in the direction of price. When price action and market sentiment are diverging from one another, we're looking to trade in the direction of sentiment. Two core principles when it comes to trading that I don't want you to forget. So when it comes down to deciding whether the TDI Pro is the right fit for you or not, consider for a moment, when was the last time you had a clear picture of market sentiment? When was the last time you had a clear understanding of price action moving with market sentiment? And when was the last time you knew ahead of time the market was making a turn, yet price was continuing to show it wasn't turning just yet? One of the reasons why thousands of traders use the TDI Pro is just that, giving them a heads up as to what the market is about to do. Also letting them know when to enter and exit trades, and letting them know if we're trading in positive sentiment, encouraging the longs, buyers are buying, or if the market is in negative sentiment, where sellers are really selling. And let me ask you, would you want to be buying when other buyers are buying, or selling when other sellers are selling? Absolutely. Do yourself a favor, learn more about the Traders Dynamic Index Pro. Go over to www.compassfx.com/TDI Pro. Well, this is Dean Malone with Compass FX, thanking you for taking the time to review the Traders Dynamic Index Pro. I look forward to you becoming a TDI Pro trader and joining thousands of other traders using this powerful tool. Make it a great day and get some good trades.